Hey guys, happy new year and welcome to another weekly focus. I hope you all had a great week and great festive period and everything. So we're back to the chart and I'm just going to show you guys a quick trade recap because I had some trades already for the start of the year. So let's do this. Where's this one? Right here. So I started the year with two positions, one on the S&P. So this is the position I had on the S&P, and the first two trades I took for the year, this one just went south. So, and it's quite a good thing because when you take the losses you can learn from it and then you bounce back. So we're looking at this position right here. I went in on the buys on the S&P 500. So you need to look at previous structure to understand what was looking at right here. We had this massive move from the downside and we had the psych level around here. I'm going to show you guys again, but once I saw price coming back to an area like this, there's a setup thing I'm normally looking for, the entry confirmation. So I had my buys around here and I was expecting prices to move to the upside. So however, this stopped me out. So if you look at this, I got stopped out on this position and price moved again in the direction I was looking at, but I got stopped out. So this just tells me once you see a situation like this where you get in, price stops you out and then starts moving, you need to reanalyze and ask yourself, maybe you got in too early, or maybe the structure you're looking at is not correct. So that's something I'll look at during this market focus today. So that was the position on the S&P. So that's a -1 on the S&P. And let's look at NAS100. So I went in, so NAS100 and the S&P 500. If you see me taking a buy on NAS100, the rest assured I'll most likely see a buy as well on NAS100. So if I see a buy on NAS100, I'll take a buy on the S&P. If I see a buy on the S&P, I'll most likely take a buy on NAS100 because the price action is always the same or kind of similar. So you had the move again from the downside, inability, stuff like that. You had a psychological level around here, and with this correction coming down, I was looking for entries around here to take prices to the upside. Now this didn't work as well, and I took this as a -1, so got in here expecting prices to move up. So we started moving, let's say, in profit a little bit, then we had price crashing and then the buyer stepped in again. So this is something I still need to look. So I had a -1 on NAS100 and the same thing on the S&P 500. Now there's two positions I'm still holding. So you remember this gold position right here. So we took this buys on, this was on the 19th, on the 19th of December, and I had this buys on gold. So I had the buys here and my intention was just to take prices to take out this high and then take out, there's another high I think around here. So if we can take out those highs, and then I'm going to cap this buys around an area like that. So I'm still holding this position on gold. So this is one I'm still holding, and I had another position on US30. So you look at this on US30, you had sellers coming in, there's a slow reaction, you had buyers coming in from here, you had sellers attempting again, there was an inability to take out these lows, and so I had my buy position at this point. So this, I was in the draw, I'm still in the drawdown on this because price came a little bit closer to my stop loss, it didn't take me out, and then price moved. So I'm going to do the focus thing again on US30 and show you what I'm looking at. So I'm still holding the position on US30 and the position on gold. So let's look now at the chart and go real quick. Alright, so here's the DXY and I'm starting again from the daily time frame. So the same principle we've been using. I'm looking at psychological levels and I'm looking at the trend line. So here is it, quite simple, it's quite easy. You're looking at a move like this, you have an impulsive move, you have a correction, and you have a pivot point, you have an impulse again, you have a correction, and you should expect prices to move to the upside. So it's just the way price moves, and I like explaining it in this form. If you have an impulse, you can see a correction, then you see the spike to the upside, or you get an impulse, you get the same thing. Now this one is just horizontal, this one is vertical, and you get a movement to the upside. So when you're looking at this right here, we had this area right here. This was a pivot point that was set, and once this pivot point got set, you had this impulsive move to the upside. Now we're seeing a correction, so we're expecting prices again to move to the upside. So if this price has to move to the upside, I'm looking at an area like this for us to have a test of this area. So that's what I'm looking at on the daily time frame. But this, like the structure thing you're looking at on the daily time frame, is quite massive because you're looking at this move from the downside. you're looking at this correction, you're looking at the impulse, giving you that pivot point, and then price takes off from that pivot point. Now you're seeing this correction thing right here. So this is my take on the daily time frame, and this is why it's very important for you to look at the DXY. So going off of this structure and just going off of this simple principle, you get an impulse, you get a correction, and you get a next move to the upside. Going off of this principle, which is just how price moves, making higher highs and higher lows, I'm still expecting the DXY to drop to this daily level or this daily trend line before you see prices moving again to the upside. So once we get price coming back to an area like this, to this trend line, where you're looking at the pivot point at this area, the intention has to be to take out these highs right here. So look at this one more time. You get the impulse, you get a correction, the pivot is set, you get the impulse again, you get a correction. You're still waiting for prices to come back to an area like this so you can take the next impulsive move or the next explosive move. So that's something I'm looking at. So I'm looking at this point and I'm expecting this pivot point to hold at an area like this. So this is the daily time frame, and this is going to take time. So you can look at this area right here, because this impulse and this correction is giving you a pivot point already on the 8-hour time frame. So you're looking at the same thing, impulse, correction, and you're looking at this movement to the upside. So if we step down to the 8-hour time frame, and I'll show you what I'm looking at. So the DXY is getting really interesting, because when you look at this from the daily time frame, you can tell the DXY is still going to sell. So in as much as we have price making the impulse, the correction, and an impulse to the upside, you get this correction. Everything you see right here is on the 8-hour time frame. So on the daily time frame, once you have this impulse, you're still waiting for price to correct again to this trend line on the daily time frame. You look for the pivot point, and then you look for the next explosive move, and an inability for prices to explode to the upside or to give you the next impulse to take out these highs and these side levels and stuff like this. You might see an inability and you see price moving again to the downside, or a break of this trend line on the daily time frame, and for prices to move to the downside. So the DXY has massive potential to sell, and the reason I'm saying the DXY has this potential to sell is because after this impulsive move, we're still waiting for prices to come back to this daily trend line. You set the pivot point and you look for prices to move to the upside. So this hasn't happened yet, so you can look at the 8-hour time frame and use the 8-hour time frame. So you're looking at something like this on the 8-hour time frame. Now this is the impulse on the 8-hour time frame. This is a correction, and the pivot point has been set. So once you get the pivot point set on the 8-hour time frame, logically you should expect prices to take out these highs. And now you're looking at psychological levels as roadblocks. So the first psychological level I was looking at, you had 105. The next level I'm looking at, you have 110. So how is price moving to these psychological levels? So that's something I'll look at on lower time frames. So once you have this structure thing already from the higher time frames, now you can clean this and let's say focus on an area like this. So how is price then moving from one side level to the next? So we went through 105. The next level we can get to has to be 110. So I'm going to clean this, and then we'll step down to the 4-hour time frame. So before we step down to the 4-hour time frame, I'm going to show you something like this. So you have an impulse on the 8-hour time frame, you have a correction, you have a pivot point set. Once a pivot point is set on a given time frame, you normally should expect prices to move impulsively again to the upside. So you're expecting this impulse, correction, pivot point, you're expecting the next impulse, so you're expecting a move like this to take out these highs. So this is what price is supposed to do. Price is normally supposed to take out these highs. Now you need to combine this with what's happening on the daily time frame. The daily time frame still needs a pullback or a correction for prices to align on the daily trend line. So in as much as you're looking at these buys on the 8-hour time frame, if the 8-hour time frame tells you it's having difficulties to move to the upside, let's say to take out this area of 110, you should expect this trend line, which is something I'm looking on the 4-hour time frame, to get taken out. You see this inability or test again of the area like this, and you see price dropping. So this is the possibility I'm looking at on the DXY. There's still a massive possibility for sellers to come in. So now let's look at this on the 4-hour time frame and say. So looking at this on the 4-hour time frame, I'm just going to put something like this. Yeah, this is a structure we've been looking on the 4-hour time frame right here. So how is price moving on the 4-hour time frame? Here you get the impulse, you get a correction. You get an impulse, you get a correction. Same thing, you get an impulse, so you're waiting for the correction. So going off of this, two principles again, you have the trend line, you have psychological levels. If you're looking at psychological levels, which is something I've explained already from the daily time frame, if you're going off of psych levels, we went through 105 and we're expecting prices to have a test of 110. So currently, as we're moving to 110, we have a trend we can work with. So that's why I'm bringing in the trend lines as well. You get an impulse, you get a correction, you get an impulse, you get a correction, you get an impulse again, you get a correction. So what you're expecting on the DXY coming into next week, so you're looking at this trend line, you're looking at the side level, you get an impulse, you're waiting for prices to correct to an area like this. So I'm expecting sales to come in on the DXY, and again, if you get these sales coming in on the DXY, I have other positions I'm still holding. I have positions on US30, I have positions on gold, and I'm still holding these positions, and those are buy positions. So a movement like this to the downside is going to favor the pairs I'm really holding the buys on. So that's why I'm not really panicking like currently, like, all right, I know I'm in a drawdown on US30, but I'm not worried like that, because you might get the sales coming in on the DXY for this buys to kick in again. So now let's look at this. We have this trend line on the 4-hour time frame. Now there's something I normally say, or I think I've mentioned this already, just the time frame delivery thing. So if you get an impulse correction, impulse correction, impulse, and you get a correction and an inability for prices to take out this area and test 110, you should expect this trend line on the 4-hour time frame to break or to get violated. And once you get a violation of this trend line on the 4-hour time frame, you should expect this delivery on the 8-hour time frame. So this is something I'm looking at. So if you move from the 4 hours to the 8-hour time frame, you're looking at something like this. So every move you see right here, the movement you're seeing right here is from the 4-hour time frame. So you're looking at the impulse correction, impulse correction, impulse, you're waiting for the correction, and inability for prices to take out these highs and test this psychological level of 110. You should expect prices to move again to the downside, because on the 8-hour time frame, you still have this trend line on the 8-hour time frame that's intact. So you're looking at this impulse correction. There's still a possibility for prices to come to an area like this, and even a possibility for prices to test the psychological level of 100. So there's still a possibility for sales. So looking at this now, once you step down to the 4-hour time frame, yes, there's a possibility for those sales to come, but that's something I'm looking at from like the major move or like the bigger move. So on the minor move thing, yeah, so you can look at this structure right here. So you're just looking at the minor structures to play with. You're looking at your impulse correction, you're looking at your impulse correction, you're looking at your impulse, you're waiting for the correction. So while waiting for the sales to come in, because that's going to take time for it to happen, you need to see several things happening before you can confirm like, all right, the sales or the sellers are going to come in or the sellers are going to kick in. So while waiting for those things to happen, you need to maintain the structure you're looking at. So you need to respect the structures you're currently seeing, and this is an impulse correction, impulse correction, impulse correction. So the only time you can say the sellers are coming in to get, let's say, temporal sales is if you see buyers attempting, inability to take out these highs, inability to take out 110, then you can say some temporal sales are coming in as a correction to deliver prices on the 8-hour time frame. It doesn't mean the buyers have come to an end or the buyers have come to an end. It simply means the sellers are stepping in for a temporal sales or for a trend line delivery or for a time frame delivery. So that's something I'm looking at. So this is quite simple on the DXY. It's just this impulse correction thing, impulse correction, impulse, and I'm waiting for the correction. So once price corrects to an area like this, I'm gonna just sit on my hands and watch what price is gonna do, because my thought process at this point is if price comes back to an area like this, I'm expecting prices to take out this highs and I'm expecting prices to test 110 on the psychological level. But if this doesn't happen, let's say price pulls back to an area like this and there's an inability for prices to move again to the upside, this inability or this difficulty from the buyers, it's an early sign that sellers are going to come in for those temporal sales. So you can have this time frame delivery where the 4-hour time frame then delivers to the 8-hour time frame. So that's something I'm looking at. So you can look at this on the hourly right here. So on the hourly time frame is quite similar. So you have your impulse thing, you have your correction, you have your impulse, again you have your correction. And look at this on the hourly time frame. This is quite interesting because normally you see something like this and you see the move, you see something like this, you see the move. But on the hourly time frame, you have your impulse, you have your horizontal correction, you have your impulse, you have your horizontal correction, and you have the next impulse. So you're looking at this on the hourly time frame, yeah? You get your impulse right here, you get your correction, you get the next impulse, you get a correction. Now you have another impulse and you're waiting for prices to correct again to this area. So on the hourly time frame, an inability for these buyers to move prices to the upside, you should expect this hourly trend line to get violated, and so prices can deliver to the 4-hour time frame properly. An inability, so I think this is the same structure I'm looking on the 4-hour time frame. Yeah, so it's the same structure I'm looking on the 4-hour time frame, and an inability for prices, so this is on the hourly time frame. Impulse correction, impulse correction, impulse. So there's a trend line thing we're looking on the hourly time frame, and if price fails on the hourly time frame, this is it. So if this sellers come to an area like this, an inability to move up, you expect this to crash or to violate the hourly trend line. Once this happens, you step back to the 4-hour time frame. The violation on the hourly time frame is going to give you a delivery on the 4-hour time frame. An inability on the 4-hour time frame, price is going to move again to the downside. Then you step back to the 8-hour time frame and ask yourself, what is price actually trying to do? So an inability for prices to move to the upside on the 8-hour time frame, then you should expect a delivery again on the 8-hour trend line and a possible sweep of an area like this. Let's say price will take out this lows, test this psychological level here of 100. So that's the bigger picture thing. This might take a couple of weeks to play out, but you can position yourself already to see these things happening before it actually happens. Then you start playing with a minor structure. So now you step back to the hourly time frame. You're looking at the hourly time frame and you're like, okay, so what's the structure you're playing with? So this is the structure we're playing currently on the hourly time frame. You get the impulse thing, correction, you get the impulse, you get a correction, you get your impulse, you're waiting for the correction. Once price gets to an area like this, you're asking yourself a very simple question: where is price headed to? And price is headed to the next psychological level, which is 110. An inability for prices to get to 110, you should already start anticipating these moves already. An inability for prices to get to 110, an inability for prices to take out this area, you should expect the crash to come in on the DXY. Now if this doesn't happen, so you can simply see impulse correction, impulse correction, impulse, you get the correction and you get the next impulsive move. Price gets to 110, gets a pull back and stuff, you see price moving again to the upside, or you get a pull back to this trend line and price moving again to the upside. So it's quite simple, just you're anticipating the moves, going off of the structure, going off of what price is showing you. I have the psychological levels I'm using as my target points, and I have the trend lines, and I'm using the trend lines as the support thing for me. Like an inability for prices to break through the trend line, then it's just going to support prices to move again to the upside. So that's it for me on the DXY. So let's look at the first pair, and the first one I'm looking at is US30. So I'm going to be really quick today, guys, because I have something else to do. So I'm looking at the DXY on the daily time frame. So what's the structure thing we're looking at? Where is price currently at, and where is price most likely going to gravitate to? So on the daily time frame, we're looking at this major structure right here. You have this impulse correction thing, you have an impulse again, you get a correction quite crazy within this area, then you get the next impulsive move. So looking at US30 on the daily time frame, here's the thought process thing for me. So once you get an impulse, you need to wait for the correction to come in. So now we've had this impulse, so at some point you should expect US30 to drop to an area like this, which is a trend line on the daily time frame. The pivot point has been set already. So once price comes back to this trend line on the daily time frame, price is looking for that pivot point so it can give you the next impulsive move. Now this is going to take time on the daily time frame on US30. So there's a structure thing you can look on the 8-hour time frame. So I'll step down to the 8-hour time frame and I'll pay attention to this move right here. So now this is very interesting, because once you step down to the 8-hour time frame, I'm going to do this. Let's start like this. On the 8-hour time frame, you see an impulse right here. You get your correction. There's a pivot point giving you the next impulsive move. Price pulls back to an area like this on the 8-hour time frame. So now you're looking at this on the 8-hour time frame. The piece, like the structure, starts making sense, because on the 8-hour time frame, I still have a bullish bias on US30, and that's why I have my buy positions on US30 already. So where is price most likely going to gravitate to? So we're looking at this. You get an impulse correction, price came all the way to 45,000. There was an inability for prices to go through 45,000. So normally you're expecting prices to come down to 40,000, to an area like this. And I think I mentioned this during the previous market focus thing. When you're using the psychological levels, and this is why you need to bring in the trend lines. So just two principles and it changes everything. So normally an inability for prices to go through 45,000, you should expect prices to test 40,000. But because you're playing with this trend line right here, you need to respect the trend line as well, because the trend line can tell you, right, I know you're expecting prices to get to 40,000, but because the trend line is here, you need to pause a little bit. Those sales might not go as far as you're looking at it. So if you clean this, so then I'm looking at this on the 8-hour time frame. So we get an impulse on the 8-hour time frame. We see the correction coming in. So once the correction comes in, so normally you'll be expecting these prices to drop all the way to 40,000. But because there's a trend line from an area like this should give you this inability for prices to drop. So now this inability doesn't mean the sellers might not take prices again down to an area like this. It simply tells you, because you're having this trend line here, and because the pivot point was set on an area like this, if price comes back to this area, you're still expecting this pivot point to hold, and you're expecting buyers to take prices again to the upside. So the only time you start getting scared or you start getting worried is if price gets to a pivot point, which is an area like this, and you see an inability for prices to test this psychological level of 45,000, which aligns properly with this area right here, with these highs. So an inability for buyers to take prices above this area and move to the upside. So let's say you're looking at something like this, then you could say sellers might come in temporarily. So that's something I'm looking at. So here's my thought process again on US30. You get this impulse, then you get a correction. There's a pivot point set already. So I'm expecting buyers to step in again on US30. Now, where is price most likely going to gravitate to? So now you have prices, let's say, hovering around. This is the midpoint of 45,000 and 40,000. So where is price most likely going to move to? Price is most likely going to gravitate back to this area, 45,000. So that's what I'm looking at. So that's the target point price can move towards again. So now I'm holding the buys on US30 and I'm looking at an area as 45,000, and that's where I'm like, that's a target point thing for me. If prices can get to 45,000, then I'm cool. I'm like, yeah, that's a trade I'll probably cap at an area like that. So that's a position thing I'm looking at on US30, and you can look at this on lower time frames as well. So let's say you step down to the 4-hour time frame, something like this. All right, cool. So this is a trade thing I have. I'll just put this on. Yeah, let's keep this on US30. So look at this, and this is something I've explained again. On the 4-hour time frame, you could see like clearly you had an impulse correction, impulse correction, impulse correction, impulse. I was waiting for a correction to an area like this so we can take the buy. So this didn't happen, and we had these sales coming in. And this is something I think I've explained again. You have a trend line thing on the 4-hour time frame. The fact that you're having a violation on the 4-hour time frame, it doesn't mean the buyers have come to an end. Because if you clean this and you step back to the 8-hour time frame, what you're looking at as massive sales on the 4-hour time frame, or let's say the violation on the 4-hour time frame, it's simply a pullback or a delivery to the pivot point thing you're looking at on the 8-hour time frame. And that's why I'm confident taking my buys on US30. Now, if this doesn't move to the upside, that's fine, because at this point it's just a probability thing, because we had nice buys at an area like this and price took off. So if price comes back to an area like this, you have a 50% chance of succeeding if you take these buys again. So that's why I have these buys on US30, and you can look at it from the 4-hour time frame and the hourly time frame. But here's my process thing again on US30. I'm expecting prices to move all the way to 45,000, but an inability for prices to move to 45,000 or an inability for prices to take out 45,000, you can see sellers coming in so they can deliver, let's say, to the 40,000 psychological level. Then at this point I have to step back to the daily time frame and ask myself what's happening, because looking at this on the daily time frame, we have a trend line thing we're looking at on the 8-hour time frame, an inability for prices to move to the upside, an inability for prices to test 45,000 and take out this area. You're looking at this psychological level of 40,000 to get tested, and you even look at an extended move all the way to this daily trend line. So once this starts selling, you have a massive sell, like you have massive sales to play with. But if this structure keeps maintaining, which is something you can't really avoid, so if you see price moving again to the upside respecting this, just play along with what price is showing you, and you can take this buys again on US30. So that's it for me on US30. I'm still holding the buys, and let's see how price is going to react. I want to come into next week. Alright guys, so let's look at the next pair, and that has to be NAS100. So here's NAS100 on the daily time frame. This is really interesting and tricky at the same time. I took a loss on this already, so the start of the year -1 on NAS100. So let's do the market focus thing real quick, and I'll show you what I'm looking at. So on the daily time frame, what's the structure thing we're playing with on the daily time frame? So impulse again, pullback correction thing. You get an impulse, price pullback, pivot point, and you get the next impulse on the daily time frame. So normally you should expect sales to come in on NAS100 so you can get price testing this pivot point on the daily time frame, so you can get the next impulse again to the upside. Now this is going to take some time. It's going to take, say, a couple of days. It's going to take a couple of weeks. So you're looking at this impulse right here on the daily time frame. Price got to 22,000, which is a psychological level. An inability for prices to go through 22,000. We had a drop all the way to 21,000. So now this is a tricky thing on this pair on NAS100. Price hasn't really closed below 21,000, so you can see buyers stepping in. Every time price gets again to 21,000, buyers stepped in. So looking at this, at some point you might get a corrective move like this, and maybe a spike, and then you see a move like this to the upside. That's something that can happen. So this corrective move can probably give you, let's say, this movement like this, and then you get a move to the upside. So that's one possibility. So I'm looking at this, or you can get this corrective move. You just see price coming back to an area like this, testing, and you get a drop, so you can get a move to the upside. So there's a lot that can happen when you're looking at NAS100. Price can give you different shapes and forms, but it's just giving you the same thing. So you're looking at impulse, you're looking at a correction for price to move to the upside. But this can be very tricky, because then you can see an impulse, correction, and move. You get an impulse, this, and then move. So price can give you like any of those structures. It's just the same thing. So looking at this right now, and this is still on the daily time frame. So we had an inability for prices to go through 21,000. So where is price most likely going to gravitate to? That has to be 22,000, which is a psychological level right here. So there's still a possibility for NAS100 to sell. So we get a test of this trend line on the daily time frame for a movement to the upside. And there's still this possibility, because we're currently sat at an area like this at 21,000. And price can hold, or the buyers can hold prices at this area of 21,000, and you see a move again to the upside. Now, why is this a possibility for buyers to hold prices at an area like this, and you see it moving to the upside? Why is this even a possibility? You need to step down to the 8-hour time frame and see what's happening. So look at this on the 8-hour time frame, and I'm a little bit worried, I'm a little bit scared with these buys on NAS100. But look at this, you get an impulse, then you get a correction, you get an impulse, price coming back, you get an impulse, price pulled back. So you look at this right here, it looks like a violation on the 8-hour time frame. Yes, we have a violation on the 8-hour time frame, but if you go off of this principle of psychological levels, there's been an inability for prices to close below and trade below 21,000. So every time sellers bring prices to 21,000, there's an inability, buyers step in. Sellers come in, an inability, buyers step in. So just looking at this on the 8-hour time frame, where is price most likely going to gravitate to? You might get a pullback thing, and then you get prices headed again to 22,000, or you get a pullback thing, you get price struggling to get to 22,000. You see that inability thing, correction, and you see price crashing. So those are the possibilities I'm looking at on the 8-hour time frame, and those are the possibilities I'm looking at on NAS100. But then if you step down to the 4-hour time frame, so just looking at this, right, I think I have this as an anticipated buy. So if we take this buys on NAS100, and now the structure on NAS100 is not the best, but when you look at the structure on the S&P500, I'm going to take this buys on NAS100. So where is price most likely going to move to? So if I edit this, I'll put 20, 20, 21, 22, 23. So I'm going to put 23,000 on this one. So that's it. So I'm looking at a move like this to 23,000. So this is the move I'm looking at. So I told you guys there's a buy thing, or this positions I'm looking at to take for next week. So this is one. So the NAS100, and this is just going off of this principle of psychological levels like this. So you get the buys, you get sellers, there's an inability around here, you're expecting prices to move to the upside, buyers step in, sellers come back in, an inability again for prices to close below 21,000. Where is price most likely going to move to? You're looking at an area like this, 22,000, and an extended move above this area, because we tested this already. The next has to be 21,000. So I'm looking at this move right here, and this is, let's say, 1:3.27. If you take this buys and the buys hold, we should expect a move like this to 23,000. That can give you, let's say, 1:3 at least. So that's the move thing I'm looking at on NAS100. So I have my buys, I have a buyers on NAS100, and this is what I'm looking at. So once the market open, I'm going to look for buying positions on NAS100. So again, this is not the best when it comes to the structure thing, but you might get, let's say, pullback, just giving you even a better price, and then I'll look for those buys again. So this is something I'm paying attention to. You can look at this on the daily time frame. It's very tricky on the daily time frame, but look at this. You get the impulse thing. You should normally wait for the correction and the buys, but I'm playing off of what's happening on the 8-hour time frame, and I'm looking for those buys again on the 8-hour time frame. We should at least get temporal buys, and let's say an inability to go through 22,000, then you get price coming back to an area like 21,000 for the move again to happen. So I'm going to attempt those buys on NAS100. So that's something I'm looking at. So let's look at this. I think I showed you already on the 4-hour time frame, and you can look at this on the hourly. So on the hourly time frame, this is just my entry time frame, and I'm not paying attention to this time frame a lot, because I think I had initial buys at an area like this. My stop loss was right here, and I got taken out. So I got taken out, price move, inability again to go through this area. So I'm looking for buys again at an area like this. If we get a pullback thing, it might even be better. So let's say you get a pullback, you might get a pullback like this, or maybe to an area like this, and I'm still looking for those buys. So that's it. I have a bias to go in with the buys on NAS100. But then let's look at the next pair, which is the S&P, and I'll show you because this one looks better. So on the S&P 500, on the daily time frame, you get an impulse, you get a correction thing, correction massive thing right here, and you get a pivot point, you get another impulsive move right there. So looking at this, so where is price currently at, and where is price most likely going to gravitate to? So we're currently at around 6,000. We had this impulsive move to 6,000. There was an inability for prices to trade above 6,000. So you're looking at this, and the question is, where is price most likely going to gravitate to? If you see an inability around 6,000, you should expect prices to move back to 5,500. So that's basic, that's simple. You should normally expect prices to move back to 5,500. So an inability for prices to move back to 5,500, then you can see buyers stepping in again. So looking at this, the same thing I've been explaining, you need to use two principles, because then it makes it really better, and it just gives you more, like, there's an advantage when you have two principles aligning properly. So two or more, but personally for me, I have just two principles I'm looking at. So you're looking at this massive move like this, on the 8-hour time frame. I'm going to step down to the 8-hour time frame and show you what I'm looking at. So you get its impulse correction, you get its impulse, you get a correction, and that's why I still have lots of confidence on this buys on the S&P, and that's why I'm going to risk 1% on NAS100 again. So looking at this, you should expect prices to respect this trend line and move again to the upside. So on a daily time frame, normally you should expect an inability for prices to go through 6,000. You should expect prices to sell all the way to 5,500. But on lower time frames, these time frames can tell you when it's right or when there's this inability, or let's say these time frames, like lower time frames, can tell you it's not the right time for you to expect the sales. Because if you look at an area like this on the 8-hour time frame, there's a trend line thing we're looking at on the 8-hour time frame, and that trend line is still holding. So if that trend line is holding, there's no need for you to force the sales to come in. So let's say we clean this and we step down to the 8-hour time frame, and I'll show you. This is it right here. So I have this trend line on the 8-hour time frame, and hold on, let's do something like this. So on the 8-hour time frame, you have the same thing. You get an impulse thing right here, you get a correction, impulse, and you get price pulling back to an area like this. So let's zoom in on an area like this. So where is price currently at, and where is price most likely going to gravitate to? So price is currently sat, or price tested 6,000, and inability for prices to trade above 6,000, you should expect prices to drop all the way to 5,500. But then we had this movement on the 8-hour time frame. So personally, when I see spikes like this, below, let's say when I see prices trading like this, so you have a trend line thing, you get a spike outside this trend line, you get again a spike outside this trend line. It doesn't mean the trend line has been violated completely, because you could expect buyers again to come in, and then maybe an inability for buyers to take out these highs, then you can see the sales coming in. So there's still a possibility for us to get some buys. So let's say we take the buys on the S&P500. We should look at first 6,000. We should test 6,000, which is the next psychological level, and we should test this area and maybe an area like this. So there's certain points you can expect prices to test, and an inability for prices to take out those areas, then you can expect the sellers to come in. And again, once you see the sellers coming in on, let's say, the S&P500, it's just temporary sales, so prices can deliver on the daily time frame. And so this is something I can tell you, I've really been looking at this. So let's say you're looking at this on the daily. So let's put this on the daily right here. So on the daily time frame, you can see like everything right here is just an impulsive move, and you're expecting the correction to come in. So once you take the buys on lower time frames like the 8-hour time frame, let's go back to the 8-hour time frame. So I'm looking at this and I'm expecting buys on the 8-hour time frame. So when we take the buys on the 8-hour time frame, first we need to go through 6,000. We need to take out this area, and we need to take out this. An inability for these things to happen, then you could start looking for sales. So we can do now the time frame delivery. So the 8-hour time frame then delivers our sales to the daily, and then the daily is going to look at this, maybe price pulling back to the daily pivot point, testing this psychological level of 5,500. You look for an inability for prices to go through this again, and you look for the buyers to step in again. So that's the thought process thing for me. So on the 4-hour time frame now on this pair, I'm looking at this. So this is quite interesting, because normally you're looking at this inability from the buyers, you're looking at this pullback. Normally you're expecting this sales, but personally I'm looking at the opposite. So I'm expecting the buys on this pair. So this one I'm looking at on the S&P 500. So we had buyers stepping in, we had sellers. So normally I'm going to take this buys right here, and an inability for prices to go through 6,000, an inability for prices to take this. It just tells you like these sellers are still involved. So if we cannot take prices above this area, you should expect sellers again to come in. So I'm gonna attempt the buys on this pair, and I like the buys on the S&P compared to that on NAS100, because when you look at this on, let's say, the 4-hour time frame, let's say the 8-hour time frame, I'm still confident with the buys on the S&P, so compared to NAS100. because of the structure thing we're playing with. So price hasn't really broken out. So you had this area that was a spike. I'm looking at all of these as spikes, so I'm still expecting to move again to the upside on the S&P 500. So you look at this on the hourly right here. So once the market's open, I'm going to wait for the swaps to, I'm going to wait for the spreads to balance properly, and this might cause prices to come down a little bit, just giving me better prices, and I'm going to look for the buys. But if I get in on the buys, like where prices are currently, and I'm expecting prices to test, let's say 6,500, and this is why I said that the buys on the S&P, the buys on the S&P is really better compared to the buys on NAS, because if we trade above 6,000, this area, we have a clear path all the way to 6,500. Like there's nothing really stopping you to get to 6,500. You can look left and there's nothing there. So this is clear, this is empty. So you just see price giving you the structure move, and we can get to 6,500. But then we need to take prices above 6,000 first. If we get above 6,000 and I believe for sellers to come in, then we can take those prices to the upside. And you need to look at the daily time frame again, because then there might be an inability for those buyers to take off. So how do you know, like how can you tell if there's going to be an inability for those buyers to come in? Let's say you take the buys, an inability for prices to go through 6,000, take out these highs. Now you start expecting the sales on the S&P 500. So that's it for me on the S&P 500, guys. So let's look at the last one, and that's gold. So here's gold on the daily time frame, and you can zoom out, but I can't really zoom out like way back. But then let's play with what we're looking at right here. You get this correction, you get the impulse thing, price coming back, correcting again to the pivot point, and you get the next move like this, which is the impulse thing, is a swing move on the daily time frame. Where is price at on the daily time frame, and where is price most likely going to gravitate to? So let's zoom into an area like this. So you have this move coming from, like you're seeing this swing move thing, and you're expecting prices to move again from 2,500 all the way to 3,000. So you're expecting gold to move to 3,000. Now this is going to take time, and once you have a swing move, you should at the back of your mind start expecting prices to pull back as well to the pivot point, so you can take the next swing move again to the upside. So that's basic, that's something that's very easy to look at and to tell. So while waiting for this to happen, step down to lower time frames and ask yourself, what is the lower time frame telling me? So if you step down to the 8-hour time frame, and so I have my buy positions in gold, and I'm still holding this because just going off of those principles. Where is price at? Where is price most likely going to gravitate to? So we had this move, we had a correction, move, correction, move, correction. So I'm expecting prices again to test 3,000. Just going off of those principles, because we've traded above 2,500. An inability for sellers to take prices below 2,500. Basic principles, common sense, you should expect prices to test 3,000. So once you look at this structure right here, that's the reason why I'm still holding the buys on gold. Like there's no other thing. So it's just going off of those principles. An inability for prices to trade below 2,500, buyers stepped in, and all I had to look for is just another opportunity for me to get involved on the buys, and I'm expecting prices to move all the way to 3,000. But then you can start looking at lower time frames, start bringing in other structures just to play with. So you're looking at this impulse correction, impulse correction, impulse correction, and I'm expecting prices again to move to the upside. Now, worst case scenario, let's zoom in a little bit on this price action. Worst case scenario on gold. So what's the worst case scenario? And you always have to look at it like two sides to the coin. So you get an impulse, then you get a correction, you get an impulse, you get a correction. Now this corrective move has to start taking out areas like this. It has to take out this area so we can move and test 3,000. So I'm currently sat in the buys on gold right here, and as price starts moving to the upside, if it finds it difficult to take out this area and this area, those are early signs already. You might see gold selling, and you should at this point expect this trend line to get tested properly and maybe violated, so you can have a test of 2500. So in as much as I'm sat here on the buys, I'm not just looking at this as, let's say, price is going to buy continuously. No, I'm looking at this, I'm in on the buys, I'm looking at this, and I'm also anticipating on the, like, there's a possibility for sales to come in, but there's a possibility for this buys to continue. So at every given point in time, I'm always looking at it. I have the buys in, there's a possibility for sellers to come in. So if you clean this right here and you're looking at this, you're looking at this move right here, you had your impulse thing, price came back, you had a correction, and I told you guys why I got in on this, because you're looking at this massive play right here as a consolidation thing. So you're looking for the buys as close to this, as close to the bottom of the range as much as possible. So now you should expect prices to move like this, giving you an impulse, correction, impulse, correction, impulse, so you can have a test of this area right here. Normally I want to see price testing these highs so I can take my positions off, but if you can test just an area like this right here, that again, like with an entry around here, you're looking at maybe 1:7 on this position. So I still have these buys right here, and I explained this last time. So the price action on gold hasn't really changed. The only thing that has changed is we've moved a little bit into profits right now, but I've been holding this position for quite some time, I think on the 19th of December. So again, price might just do the opposite thing. The markets might open and you see price crashing like this, so that's fine. Now you can hold these positions for a couple of days and you still get a loss on this. That's how this game is, that's how the business thing is. So again, you can't really complain. Just look at your structures, look at the setups you're looking at, and take the positions, and you let the probabilities play out. So that's on the 8-hour time frame. You can look at this on the 4-hour time frame. Now when you have structures like this, so you're looking at this on the 8-hour time frame. So when you're playing with a structure on the 8-hour time frame, personally I don't like looking at lower time frames. So if I'm looking at gold, I'll stick to what's happening on the daily. So because the structure I'm playing with right now is on the 8-hour time frame, so if I'm playing with the structure from the 8-hour time frame, then I want to pay attention to the daily consolidation move. I know there's a possibility for this to happen, and then so I'll stay on the daily on the 8-hour time frame. So the 4-hour time frame on the hourly, I'll just go to the hourly to take my positions in, then I'll manage this on the 8-hour time frame on the daily. So looking at this again, it's very simple. You get this impulse, you get a correction, pivot point set and everything. Price gives you the next impulsive move or the next swing move. So again, you're expecting prices to pull back so you can take the buys, but then you still have the 8-hour time frame supporting this principle, supporting this buyers. So on the 8-hour time frame, I'm looking at something like this. So on the 8-hour time frame, I get this move, correction, I get this move, there's a correction on the 4-hour time frame, but everything is this move on the 8-hour time frame. There's this correction thing, and I'm expecting prices to move again to the upside. So that's what I'm looking at on the 8-hour time frame right here. Hold on, let me clean this. Yeah, right here. Alright guys, so I think I can, let me see, I'll probably just show you the position thing I had on gold. So I explained this already, and I've shown you this on the Discord thing as well. So I had the buy positions on gold, and this is all I'm expecting. So I had the buys here. We sat through this consolidation thing, consolidation, spike. Price came back to the entry point, and now price is moving to the upside. So when you have a position like this, so the things I'm not going to do is manage this on the hourly time frame or the 4-hour time frame. I'm going to use the 8-hour time frame to manage this position, and maybe the daily time frame, because I'm looking at this area. If price can get to this area, and I'm looking at this, so if price gets to these highs, I'm going to cap this position out. And I think I explained this last time. This right here is, let's say, 1:11. So if I can play this out, that's a massive swing. So those are swing moves, and that's how I look at my swing positions. So back on the 8-hour time frame, I'm still expecting this to move to the upside. So you're looking at this, and I've explained this already, impulse correction thing. Everything you see here is just an impulsive move on the 8-hour time frame. You're looking at this correction, and I'm expecting prices to move to the upside. I'm going to cap the buys at this area, and in a belief of prices to take out this area, you should expect the sales to come in. Expect me to take a -1 on a pair like this if I don't break even, and and that's it. So it's quite simple, it's quite easy. It's just the structure thing we're playing with, and I'm going to respect this and see how price plays out from an area like this. So alright guys, I think that's it for this week, and I hope you found or you had value from this. If you have any questions, use the comment section, and don't forget to watch last week's market focus so you can follow along as we're moving with prices. Alright guys, see you during the next one. Bye for now.